Good evening and welcome to this very special workshop. I think we're going to address some very uncertain areas and areas which are not easily available. I'll give you an example. Like if you have a session on dementia or Alzheimer's, the information is right out there. You Google a little bit, use research, and you'll get the information on a piece of paper. But this kind of information not got straightforward. And I would advise you all, after Gavin's session, if you can ask him questions, and if he has the information straight up, he will definitely be to answer you all. More so, he'll be sharing all the experiences he has gone through with different clients and what problems they've had with insurance. And I think when I say insurance, I'm talking about government insurance as well as private insurance. And I think that is the most important thing that we're going to learn today. The unsaid word, the the unsaid words is not on the paper. The fine print which is there. So that is something that we're going to learn today. So without further ado, I like to introduce Gavin from Meridian Wealth. Gavin, great to have you back with us on Memory Cafe.
Thank you, Sheldon. Okay. So I will just start my timer. Otherwise I can just go on and on about this topic. Okay. So today we are going to cover a topic which is get smarter with taxes and insurance. So just like the said, there's a lot of changes in the tax environment which constantly happens. There's a lot of changes in insurance. There are a lot of finer points which people don't look into. Like people generally look at the overall surface. They feel, yes, everything is fine, everything is okay. But they really do not go deep into their finances. They don't go deep into their insurance. There are some children who even make their fixed deposits in their parents' names because a senior citizen gets a higher rate of interest on a fixed deposit. But then the question becomes, who is reporting the interest? Are you reporting the interest as a part of your taxation? And the other question is, does the government know about this? So today we will cover a lot of information which may be eye-opening for y'all. A lot of y'all might come to know sections today which y'all never knew were available. And going forward, it's always good to see how you can always be compliant. Because we tell people it's rather better you be compliant than wait to receive a notice. Because if you receive a notice comes years down the line. And when it comes years down the line, it comes with the relevant interest, it comes the relevant penalty. And if you have to pay 100 rupees, you end up paying 200, 250. So let's get into it. So what are the deadlines currently which are facing us? 31st of July 2026. That's the end of this month. Those who file your tax returns and have not filed it yet, it's time to immediately meet your chartered accountant, meet your tax consultants, submit your data, and get this done with. Preferably before the 20th, 25th of this month, because post that, the servers get jammed. And if your return ends up in the month of August, if the income is above 10 lakh, above 5 lakhs, you could pay a penalty of about 10,000 rupees. And if your income is below 5 lakhs, you could pay a penalty of about 1,000 rupees. So August 2026, there are some of y'all who may be still, consulting. After leaving your job, you all might have joined as a consultant. You all might be running a small business or some training or music. It could be anything. So those people will file an ITR called ITR 3 and ITR 4. So people with business income, doctors, lawyers, professionals are August 31st. And people who are having companies, who are having limited liability partnerships, their deadline is 31st of October. Majority people will fit in July 31st. There may be some people who are parts of partnership firms, old partnership firms, new partnership firms. Please don't forget that all that data also needs to be included in your return when you're filing it on July 31st. Some of you all may have gone to the bank, some of you all may have not gone to the bank in this new quarter. And very often senior citizens go to file Form 15G, 15H so that the bank does not deduct TDS on their deposits. Effective April 2026, these forms have got new names. So when you go to a bank today and you say, give me Form 15G, 15H, they will give you Form 121. It's no longer 15G, 15H anymore. It is Form 121. You may have been earning pension. Your company would have given you Form 16. Some people who may still be working, your company gives you Form 16. No longer. April onwards, your company is going to give you Form 130. Similarly, banks, senior citizens who are taxable, who are getting dividends from listed companies, who are getting interest from the banks, which is above the non-taxable limit. Earlier, you would get a Form 16A. Now it is Form 131. But most important, which is something for majority of the senior citizens, Form 15G, 15H and Form 121 is the same thing. So keep that in mind. So when you go to the bank, you will be asking them to file a Form 121 if you don't want your TDS to be deducted, providing you are not taxable. You know, often people feel that even if I'm taxable and I file for Form 15G, 15H, which is Form 121 now, I won't have to be taxed because the bank will not cut my TDS. You are mistaken. What happens is even if you file Form 15G, 15H, Form 121, your bank informs the income tax department that we have paid this person so and so amount of money and this person has asked not to deduct TDS. So even if your TDS is not cut, the income tax is very well aware of every rupee that you have got from the bank. Very often people say, I do not need to file my returns. So what is the right answer to this? If you have been filing your return under the old tax regime, below 60 years, 2.5 lakhs, 60 to 80, 3 lakhs, 80 years or more, 5 lakhs. Please remember, if you cross these tax-free limits, you need to pay or file your income tax. You might not necessarily need to pay tax. You might have a 5 lakh income, then you might have invested, you might have more than a 5 lakh income. You might have then invested 1.5 lakh in a tax saver instrument. You might have invested in your ULIP plans, LICs, health insurance, which will bring you below and you will not need to pay tax. But considering that you have crossed the tax-free limit, you need to file your return. So please monitor this carefully. Tax-free limit under new regime. See, there's been a lot of newspaper headlines saying up to 12 lakhs, no tax, up to 12 lakhs, no tax. Yes, up to 12 lakhs of relevant income like interest, pension, salary, there is no tax, but it comes in the form of a rebate that yes, you file your return, but you're rebated that much amount off. So if you're filing under the new regime, or the last regime you filed was the new regime, if you have crossed 4 lakhs, which is the base slab of the new regime, you need to file your income tax. What are the other reasons you need to file an income tax? For example, a company is paying you dividends and deducting TDS and you want to claim that back. Or you forgot to give your Form 15G, 15H to the bank. They have cut your tax. You have sold a property and you need to claim a refund if the gains were below the relevant limits. If you want to apply for a visa or a loan, a lot of senior citizens who are traveling have been coming saying that I need to file my income tax return because a travel agent is saying, give me a tax return copy. It's irrespective. You might not even pay 1 rupee tax. Income might be 50,000, 1 lakh, but they need a tax return to submit for visa processing. So if you intend to holiday, go to certain destinations which ask for this as a part of visa processing, you need to regularly file your visa. And if anybody has sold, shares, you have sold any capital asset and you have underwent a loss, you made a loss on the share, you have made a loss on the sale of property. And if you want to carry forward that loss to the next year and adjust it in the future against future gains, then you need to file your return before the due date. Now, this is something which may be new to a lot of people. There's called a provision of section 139(1). Let's assume your income is 50,000 rupees and you are below the taxable threshold of both the new and the old regime. Have you traveled to a foreign country and spent more than 2 lakhs? If yes, you need to file your return. Has your electricity bill totaled more than 1 lakh in a year? You need to file your return. Is the aggregate TDS which has been cut and deposited in your PAN card 25,000 for a regular person and 50,000 for a senior citizen? You need to file your return. Deposits in one or more combination of savings banks exceeds 50 lakh rupees. You need to file your return. Plus, there are more conditions, but the ones which mostly apply to people who have retired is the ones that I have put up on the screen. There are a lot of other conditions, but that is more for senior citizen is still a professional and is still earning professional fees. But I think something like a 2 lakh expenditure on a foreign country may be news to a lot of people who have not been filing returns but have spent 2 lakhs in that particular financial year and have traveled. Then you are due to file your return, even if you're not taxable. Then sometimes again, people feel like, whatever I do, the department is not aware. If you have done cash deposits of more than 10 lakhs in your savings bank account, it is reported to the income tax. If you buy a car above a certain value, it is reported. If you sell or purchase a property, earlier the limit was 30 lakhs, but now registration agencies are reporting sales as small as 5 lakhs, 3 lakhs. Investments in bank deposits, your FDs, shares, mutual funds, in that particular year, more than 10 lakhs. Payment of credit card bill in cash, 1 lakh. If you use a credit card and you spend more than 10 lakhs a year on that credit card, or if you buy, sell, credit, spend foreign currency worth 10 lakhs in a year, these are called specified high value transactions, which the department is very well aware, because now suppose say you make that FD of 10 lakhs, the bank will report that this person made an FD of 10 lakhs in this year. If you make a mutual fund of 10 lakhs, the mutual fund company will report that this person has, or you make a postal deposit, or you buy a bond, or you buy debentures. So be very careful, because if you're not filing returns, now this becomes quite an alert to a department if you're not filing a return, because if you're investing, you're buying, you're selling a property, and you're not filing the returns, under this specified high value transactions, you're bound to get a notice saying that you have invested X amount on fixed deposits, X amount in mutual funds, or you have bought this property. Kindly justify your sources of income, as you have not been filing returns for the past number of years. If maybe say you didn't file your returns because you are not taxable that year, your mutual fund was not performing, so you redeemed, you made new, or you moved from one bank to another and hence you created brand new fixed deposits. It's okay, that explanation can always be given. But these indicators are taken more seriously, especially if a person is not filing their returns, because then the department doesn't know that you have an income, and then they wonder, how are you doing such kind of expenses, investments, when you're not filing a return, which means you have an income below the threshold. See, this is a sample of an AIS, which is an annual information statement, which is available with the income tax department. So if you see this screenshot, it knows that ICICI Bank has paid this person 851 in bank interest. Then mutual funds have been bought, sold. Equity shares have been bought, sold. So the department knows more than what you think the department knows. And we always say be compliant and sleep the night well. Report what you have to report. Check your AIS. Very important. Before filing your income tax return, always check your AIS to see that is everything accounted for. Foreign assets. So, there is something called as an FA schedule. And you need to, especially if you're a resident Indian, if you have got any kind of foreign assets like Bitcoin, like some people have bought Bitcoin, people have bought, sold Bitcoin. It's a part of a foreign asset. You need to show all that information. Some people are buying US stocks using brokerage platforms. That is also a foreign holding. So people don't understand, that these things which are not on Indian soil form a part of foreign assets. And you need to declare this, without which you could face penalty under the Black Money Act. Even people have things like PayPal wallets and all, but a lot of these servers, a lot of these tax jurisdictions are out of India. So it forms a part of foreign assets. People have been receiving notices. Maybe somebody who at one point of time was working in Dubai or in US and they had a bank account there. And now all countries are sharing information with each other. People who have forgotten an account back in the US and there is some $2 left in that account are receiving a notice now saying that you have foreign assets and you have not declared this while filing your income tax return. So please be careful of all of this. This is something brand new which has come in this year, and people are still trying to figure out how to go about this, what to do. They have entered a new column called receipts, not in the nature of income. And since this is the first time this column has got introduced, the accounting community is trying to figure out tomorrow, even if a child sends money to a parent for maintenance of that parent, do you need to declare that amount here, saying that this money was an income, but it is not taxable because it came in the form of a gift. So this is a brand new column which has got introduced. And I mean, people are still figuring out what all needs to, of course, the department will come with clarifications, but right now, since it's a new field, people are saying that any amount of money which is not taxable, like for example, a gift, a maintenance amount paid to somebody, a reimbursement amount paid to you, should ideally be mentioned in this receipts, not in the nature of income, because it is something that you have received, but it is not income for you. Example, there might be a friend abroad and you're looking after the painting of his house and he's transferred you some 5 lakh rupees. Now that 5 lakh rupees is not an income for you, but it was a receipt. So it might have to be shown here. Let's move to health insurance. Couple of y'all might have had experience with claims. A couple of y'all might have not had experience. When do you see rejections? So in our experience of handling insurance for the last several years, number one is like your pre-existing diseases were not disclosed. So just say, for example, you had diabetes and you did not disclose and you got admitted because your diabetes caused high sugar, led to some issue with the retina, but that is pegged to diabetes. Your diabetes, sugar, retina, all connected. And you go to say to ASGI hospital or you go to any eye hospital and you're talking to the doctor and you say, oh, doctor, I got diabetes and this and that. And you come to know that because of your diabetes, your sugar spike that caused some issues with the eyes and retina, so and so. And you file your claim. Now, if you have not declared that I have diabetes, the insurance company will connect and say, oh, because you had this, you got this, and this is the reason we are going to decline your claim. So we tell people, it's rather better that your insurance policy gets rejected. Just declare everything. Or the insurance company might load. They might say, okay, if a normal person pays 100 rupees premium, because you have this, you will pay 110, you will pay 120 for the same policy. So we tell people, please declare everything so that you don't have a problem of non-disclosure. You might have had surgeries in the past. There might have been a stent. Please declare everything. Problem with documents. Now, as an example, my father was once admitted to hospital and then a rejection came, saying that this, for what he was admitted, he already had it as pre-existing, and hence we're declining the claim because you did not declare this. And we didn't understand. We said this is something brand new, which is just diagnosed. And when checking the documents, we realized that that particular machine on which his scan was done, the battery of that machine, which maintains the time and date of the machine, had conked off. So the time and date was going back to the original manufacturing date of the machine. Then immediately we got a letter from the hospital explaining that thing, and the claim got approved. So sometimes there's a problem with documentation. Sometimes there may be overwriting of a hospital record. The insurance company might take that as tampering. So ensure documents are proper. Needless hospitalization. This is something becoming very common. So I prepared a special slide for that. We'll get that into the next slide. Exaggerated claim. Sometimes, these are cases which have happened where somebody is not even actually admitted, and they tell the doctor, okay, you show this, show this billing, and we'll split the amount. So they have this arrangement with the hospital. Or you're admitted, but you want to cover more. So the doctor, the hospital, you tell them, Ari, you add this to the bill. No problem. Let the insurance company pay, and then we can settle it among ourselves. Insurance companies also are very, very smart. They have got all data available with them. If you tell them on the Panjim pin code of 403001, what is the average rate for a retina operation? What is the average rate for a stent? What is the average rate for a C-section? They will give you the most detailed data possible. So you can't say that, oh, this eye operation costed so much. They'll say, no, we've got records of hundreds and thousands of eye operations happening in this pin code, around this pin code, or in this state, and this is the rate. So how can the claim be this amount? And not following the SOPs of treatment. For example, that's why you need to read into your policy. Does your policy cover modern treatment? So for example, suppose there's a heart surgery and the doctor will ask you, do you want robotic or do you want the regular heart surgery? People will say, I want robotic, because they say, okay, a machine will probably be more accurate. But your policy might only have regular, no? Then your full claim will be declined. Because the insurance company will say you could have used a regular heart surgery, but you opted for a robotic surgery. This is not covered. Modern treatment is not covered under your policy. So thank you, bye-bye, and we are rejecting your claim. So as long as you're aware of what your policy covers, you're good. So this was the earlier point which I spoke about, no? Needless hospitalization. These are some examples that of a claim rejection. We are unable to admit the claim because the hospitalization is not medically necessary. Now, suppose you go to the hospital and you just have a fever, you're feeling drowsy, you say, okay, admit me, give me drips, this, that. I have got health insurance, no problem. When your claim goes, your insurance company will also check, was it required? Did you need to be hospitalized, or could you just have taken OPD treatment and go? This is another example of another insurance company. The hospitalization does not meet the definition of medically necessary treatment. Hence, claim is rejected. So just because some people have that feeling, no, that okay, insurance company counts overnight. So 24 hours when I'm admitted, it's covered under the insurance policy. No, it needs to be medically necessary. And even if the insurance company does decline in such cases, you should be able to get a doctor's certificate stating that, yes, maybe this pallets count was below a certain thing, or this. You'll need to get a certificate, and then you'll need to file a grievance with the insurance company, because might have been medically necessary, but the insurance doctor did not see it that way. Then you need to get a certificate. Like, for example, there was a recent claim which we processed, and we felt that, there might be a rejection. Like, we were not very sure about it. So what we did is, first only we informed the client, see, since your doctor has said this is medically necessary, get a letter. So with the claim itself, rather than waiting for the claim to get rejected or questions to come, we got that medically necessary doctor's note and why it was medically necessary, etc., attached with the claim while filing the claim. And there was no problem. In 7 days or so, the claim was settled. So very important to, have your documentation order, especially when it's a reimbursement claim. Now, the claim I spoke about was a reimbursement claim. When it's a cashless claim at the hospital itself, within 4 hours, 2 hours, 3 hours, depending on the speed, time of day, you know whether your claim is getting accepted or not. And then again, just because they say they give you pre-authorization, it doesn't mean they will accept. Because if your policy covers, say, a regular surgery and you opt for a robotic surgery, it might not cover, because they'll say, no, robotic was not covered under your policy. So even though we gave you a pre-authorization, you did not read the terms and conditions of the policy. 7 ways to avoid claim rejection. Number 1 is know your policy very clearly. What are the terms, conditions, what is covered, what is not covered? What is the kind of room you're eligible for? Does your room rent have a fixed amount? Is it dependent on your cover? Does it say like, okay, 5,000 a night? Or does it say 1% of your sum insured? Does it say 20,000 for ICU? Or 2% of your sum insured for the ICU? Look at your policy terms and conditions. Be accurate. Always declare. Stick to claim rules. Don't like say that, okay, now I've got discharged. I will rest, I will recover, then I will submit the claim. No, it might be rejected because it's out of time. Stay updated. Sometimes the email might go to spam. Sometimes the renewal SMS might not come to you. And at a certain age, it's very difficult to either re-enter or get a new policy. So you make sure that you keep track of your renewal. Always update the nominee details, because if in case something happens to the policy holder in the hospital and that person expires and it's a reimbursement claim, the nominee is paid out the amount. Know your policy limits. What is excluded? What is not excluded? What is your deductibles? Many people have a policy, have something called as a copay. For example, if my policy is 10 lakh rupees, 10% I will pay, irrespective whether the whole claim is settled, not settled, whatever, I will pay 10%. So does your policy have a deductible? Many people opt for, like, sometimes if you opt for policies which say for the first 50,000 rupees of the year, I will pay. If the bill crosses 50,000, whatever's above 50,000, then the insurance company will start paying. Have you opted for this? Because people will go to do something like a cataract operation, which fits within 50,000, and then they'll wonder why they didn't get the claim. It's because you have opted for this deductible. And when you opt for a deductible, automatically your premium drops. And resolve disputes. Just don't give up. If an insurance company says, no, we have rejected, don't give up. If you feel that, yes, my claim is right, it can be, you can fight it right the way to the regulator. And regulators today are more understanding, and they're usually pro-consumer if all your paperwork is in order. So even if your claim is declined, you can escalate it first within the insurance company. And if the insurance company still doesn't settle it, you can escalate it to the regulator. Talking about various policies, there is this PMJAY policy. It's a central government, 5 lakhs for eligible family, which gives, basically it's for senior citizen family, aged 70 and above. They receive this for their family as cover. Valid at more than 36,000 empaneled hospitals at what it says. And it covers various ICU, diagnostic tests. If you run a search on this online, the feedback is absolutely mixed, where many people are talking about hospitals have declined them because citing that government has not paid our bills, so we're not taking more. I mean, it's something for each person to judge. I just thought I'll check in our Panjim pin code what are the hospitals empaneled under central government scheme, and it says nothing. So if you see pin code 403-001, zero private, zero government, 0000, everything is zero. When I searched on the MAPSA pin code, all it showed was district hospital. So this could be something which may be very effective in Delhi, because most of the reports, most of the news, everything talks about coverages in those areas towards the north. But here, I mean, can enroll on this website. Doesn't hurt. It's free of cost. Can enroll on this website, which is that beneficiary.nhagovernment.in, and make that Ayushmann card, which makes you eligible. But right now, if you look at our pin codes, there doesn't seem to be anything much which is in Goa. Deen Dayal. So Deen Dayal is like something which virtually every Goan has. In July, recently, there was a notification that the insurance company is now, coverage is now 4 lakhs per annum, and family with 4 or more members, 6 lakhs per annum. So, sometimes there is a misconception. People say that I have 4 lakhs, 5 lakhs, 6 lakhs with Deen Dayal. It's okay. It's enough, no? What's the problem? Why do I need a private health insurance also? I will tell you what is the problem. I'll give you an example of my own father-in-law. So he had a fall at home, and he was admitted to a hospital in Panjim. That hospital was covered under Deen Dayal. The bill came to something like 1,19,000, if I recall correctly. And we said, okay, good, he has Deen Dayal. Unfortunately, he did not have a private health cover because he had certain heart issues, and thus the private covers had all declined him. So he got admitted. Bill is 1,19,000. We gave the Deen Dayal card and we said, okay, let's see what. So the hospital said, you'll have to pay the balance before discharge. So we said, what is the balance? 99,000. And we said, what? But he has Deen Dayal cover, no, of 2 lakhs, 3 lakhs. They said, yes, but for Deen Dayal has various sublimits. So for this particular thing, the sublimit was some 400 rupees a day for dormitory, and he was in the room. So he had to pay those balance charges. And for this particular surgery, it was a maximum of 20,000 rupees. So all Deen Dayal paid out of 1,19,000 was 20,000 rupees. And the balance we had to pay from our pocket. I'll give you an example of another client. Unfortunately, two members of a family had cancer. One person took treatment in one hospital, one person took treatment in another hospital. Now, in one private hospital, those necessary injections and the treatment, which happens over a course of some 5 visits, was covered. And in the second hospital, which was a slightly lower grade hospital compared to the previous hospital where the other person took treatment in, they had to pay an amount for cancer treatment for that same five types of 5 doses. So different hospitals have agreements with Deen Dayal. They appear to have different rates negotiated, and you don't really come to know this unless you are admitted. So I've seen cases where people have been paid in full. I've seen cases where people need to pay and come. And see, for example, Deen Dayal, no, now you go, like, see, I mentioned room and dormitory. In Deen Dayal, you're entitled only for a dormitory. And if you decide you want a room, you obviously need to pay, no, that balance for the room. Dormitory comes at like 400, 600, 800 is what various insurance rates are of dormitory. Rooms are at 3,000, 5,000, 6,000, 7,000. So you will need to pay this amount if you don't have, even if you have Deen Dayal, but you don't have a private insurance and you want to get admitted to a room. Not only that, I've seen examples where there are some more, where there have been drugs, like say, which is possibly more effective. But then that particular drug brand is not covered under Deen Dayal. So you either pay from your pocket or you opt for a drug which is potentially has a lower effect. Same thing. I spoke to somebody, and with regards to an ENT surgery in a hospital in the Mapsa jurisdiction, there Deen Dayal covered some 25,000 rupees odd. The surgery cost was 80,000. The balance had to be covered by the patient, because see, doctors have a specific fee. They have this, they have that. You may opt for a room, you may opt for certain services which are not covered under the ambit of Deen Dayal. So while when you go to GMC, you go to district hospital, everything is end to end covered because it's a government hospital. When you decide to use Deen Dayal in a private hospital, I will always advise people, find out first how much will you receive, what is the coverage, what is the limits, and then make your decision. Don't go in thinking that, it's covered. I've got 5 lakhs of cover. My family is more than 4 members. I've got 6 lakhs of cover. Please don't keep that in mind, because there are various sublimits, there are various agreements depending on hospital to hospital. I have several examples like this way. But you are the best judge. When you go to the hospital, always ask at the counter what is. I've seen people being turned away because the dormitory is full, right? Deen Dayal has covered in dormitory is full. Where are they going to put you? So then they give you an option. Okay, you go to a private room and you pay the balance, and you need to be admitted. So what do you do at that point of time? Because you might feel, okay, this doctor here is more effective. I would rather prefer here because of convenience. GMC, there is no space for a attendant to sleep properly at night, and various reasons. So always ask. So the question is, do you have a health policy? If your answer is yes, please read the terms. Does it cover robotic? What are the sublimits? What is your deductible? Are you eligible for things like free health checkup every year? Why let it go? Do the free health checkup. They've got tie-ups with labs. Some have a reimbursement. Some have a cashless tie-up, where you just health checkup and walk away, and your reports will come by your email and WhatsApp. And if no, if your health history is relatively clean, even at this point of time, there are some companies which are willing to take you in. So you can file and check, right? If an insurance company is willing to take you in at this point of time, if your health history is reasonably okay, even if there are some complications here, there, the case can always be put up, and the insurance company will get back as to whether they are ready to cover you or not. If they're not ready to cover you, they'll just refund the same premium they've taken from you. They'll refund it back to the bank account. So it's very important to have a all-round cover, proper coverage. Okay, so it's some 35 minutes. I have reserved the balance time if in case anybody has any questions for me. So I'm opening the floor for any questions.
Okay. Thank you, Gavin. That was a very good um, information. Can you just another thing about this tax? So the way it is very complicated, it's better to go for a CA, right? In your opinion?
Yes, yes. It's better to go for a chartered accountant. There are also tax filing professionals, and there are online portals, but the problem is, what if you do not know the right box to click? You don't know the right check to check or uncheck. Self becomes a little bit difficult. Although income tax department has made the website very simple. If suppose say somebody is not indulging in things like crypto, capital gains, you have very simple pension, salary, bank interest. The income tax department also, with due credit to it, has really revised their website, has
Yeah.
made things go smooth on their website. So yes,
Other thing is regarding the health insurance. Most everybody takes the health insurance, keeps the policy document inside their locker.
that's absolutely correct.
But
Yes.
like in case of an emergency, a grab bag, like so, what information we should have with us so we can immediately grab it when you're going to the hospital?
So
Can
we
you?
tell clients that what you really need to have with you, who are the potential people who will either take you to hospital, who reach the hospital when you are there. They need to have your policy number, they need to have your insurance company's name, and they need to have your KYC documents like your Aadhaar PAN. Because when you get to the insurance counter for hospital, the hospital, and it's a cashless, they ask you, please give policy number, insurance company, and KYC documents. And then they upload the case. If it's a reimbursement, then okay, once you come from the hospital, then you yourself will probably file it. But if you are immobilized and you cannot respond, you cannot give any details, you need to have these details placed with somebody who is
Okay.
known to you.
Yeah, thank you. Anybody wants to ask?
Yes, I want to ask
Who is this?
Joyce.
Joyce, go ahead,
Yeah.
go ahead.
Okay. Gavin,
Please tell
my
me.
daughter is a US citizen.
Okay.
And last year somewhere, she got her refund from life insurance. Now, it's
Okay.
a pretty big amount. She does not have an Aadhaar card because she left India before the Aadhaar card came up, but she has a PAN card. Now,
Okay.
what is to be done about that? We have never filed her returns.
Okay. So in this case, now we'll have to get into a case specific, like what was the policy? Is it a money back policy? Is it a ULIP policy? It
No,
is a
no,
whole
it's
life?
LIC policy, Jeevan something it was called.
Okay.
So that has come back now, and it's a big amount.
Okay. Have
Yeah.
they cut TDS?
It's 19 lakhs.
Have they cut TDS on the policy?
Yes, they have.
Okay. And in which financial year was this? Last financial year?
Yes. 25,
Okay.
26.
Okay. So what you can do is you can take down my number.
Yeah.
I had put it on the screen. I'll put it on the screen again. You can take down my
Yeah.
number because we will need further details, like, to be able to specifically guide you. We'll have to check the exact policy type. Is there any taxability? Is there no taxability? Is this survival benefit? And if it is not taxable, it will be possible to file her income tax return and get the refund back.
Okay. Yeah. But you see, the company has, LIC has not given us the breakup of how much, what was the premium amount, what is the loyalty, what is the bonus.
Okay.
They have not given us all those details.
So if they have not given, what probably we will have to try is going to the LIC website. When you go to the LIC website, you can create an account there. You have to put the policy number, the plan, the term, the premium, mobile and email, and you're able to create an account. And generally there are various download options of different types of documents available. You might find the right document there.
Okay.
So you can connect to me separately because this is
I'll
like on a
connect,
document to document basis.
Okay. I'll connect with you.
Joyce,
Okay. Thank
one
you.
more thing I would like to add, Gavin, if you don't mind.
Yes.
Is your daughter is a US citizen. She's
Yes.
paying tax in US.
Yes,
So
she
this
pays.
will
And she
also affect her
also
tax.
pays, 1 minute, she also pays on whatever income her FDs and all. She pays on that also.
Yes.
Yeah.
So
So,
that will be another aspect for her.
okay.
So just
Because
keep
any
that in mind.
tax paid here, she'll be able to take the tax credit, vice versa. They're also in the US because India and US have tax agreements.
Okay.
That's why her case is very specific, since especially say with US and Canada citizens, there is a lot of more specifics which we need to get into.
Okay.
No, Joyce, I would advise you, I will be putting up Gavin's
Number.
contact details on the WhatsApp group. So I
Yeah.
would advise you to contact him and give the information. Then he will be able to actually see what policy and he will be able to advise you better.
Okay.
Yeah.
Okay. Thank you.
Thank you, Joyce.
Thank you, Gavin.
Welcome.
Okay,
Anybody have any other questions?
Yes. Gavin, that was a fantastic presentation. Very
Thank
well,
you.
all the details. I just wanted to ask you, this is from a layman's perspective. Are we given an option to file returns under the new regime and the old regime?
Yes, if your income is restricted to like your pension, salary, capital gains, you can compare actually under the old and new regime, which one is more beneficial for you, and you can choose your regime. People with business incomes and all, there are different restrictions on them, but for the general population, you can choose. But the only difference is when you change your regime, no, there's a specific form to be filed to say, I want to change my regime. So you first file that form, then you file your tax. Otherwise, what will happen is that if you don't file that form and you file it under a different regime, you're bound to get a notice because there'll be a mismatch.
But all of us are under the old regime, right, Gavin?
It depends, no, how you're filing. I mean, we'll have to check whether by default now, suppose most people who are under like even pensions, even salaries, a lot of employers and all are defaulting the new regime. Then when it comes to you, then it's your choice to see how to put it. But if, for example, if somebody has defaulted you under the new regime and you're falling under the old regime, the person would have cut less TDS. So that means you will have to deposit TDS. So you need to see, because even when your pension, if you suppose you're getting pension or you're getting a salary, you need to ensure that you inform the employer before the new financial year starts. You need to inform your employer that I am filing under new or I am filing under old. Based on that, they will generate your form 16 and accordingly they will cut or not cut for the year. They will see that. But you need to tell them prior to the new financial year starting. Others, they will cut as per old, you will be filing under new. Oh, under new, they will not cut, you will be filing under old. Then you will have to go to the bank and file the TDS challan. So we need to break down the income and say, okay, what is the kind of incomes? What is the ceiling? And then take a call saying that, okay, I think it's better to file under the new because you have this kind of incomes and the new regime is better for you. Even if you exhaust everything under the old, still under the new regime, you pay less tax. So on a case-to-case basis, we sit with people and we're able to tell them which regime is better for them, showing them the comparison side by side.
Thank you, Gavin.
Welcome.
Sorry. Anybody else has any more questions? Meridel?
Yes.
Okay. Good.
Good evening, Gavin.
Hi.
It was a
Good
nice
evening.
presentation.
Thank you.
My thing is not exactly a question, but something which happens regarding insurance and what happened particularly in my case and my wife's case, which will be benefit for others. One is regarding, I won't mention the name of the company, although I have all the documents with me to prove what I'm saying is correct. There was this question comes of some new procedures or new medical things which come, and then they included in the coverage. Like what happened was, now I had a insurance for my wife, for myself, and the children. Of course, now the children are out. For the last 34 years, same company. And I submitted, there was some new thing called AMD, age-related macular degeneration of the eye, for which you take injections in the eye, which my wife had to take, costing about 22,000 per injection. So when I submitted, the company rejected it. To make it short, they rejected because they said they produced something, the books, saying that this is applicable from so and so date, but 4 years later, or waiting period of 4 years, whether you are an old insured person or a new one. So, and that particular clause was not clearly mentioned in the new things which they had sent me when I had renewed my policy. And I went, that they refused it. I went higher up. They refused it. I went still higher up, followed all the things. Then I finally went to Ombudsman, which you referred to earlier. Why I'm telling you this, because normally these companies, I have my experiences, are taking benefit of the inability of the senior citizens. They think they are the soft target. When I went there, it took about more than a year with the ombudsman, with reminding them off and on. Sometimes I was almost losing hope. But finally, they responded. There was a hearing fixed online. and there was a judge appointed by this thing, and I had to attend, and I was given the 20,000. I won the case with one sitting, and the reason was this, that is very important. The judge says, whatever you apply new, that person had insurance with you for 32 years, and you want him to wait another 4 years to claim the amount, he will not exist at that. That's the way they put it. I got that 20,000 plus interest on it. So yeah, it was very easy. Your details how to go if anybody has any problem like that, to tell you what we did. All I did was all sitting down at home on the computer, sending the second case, another one, which Gavin has not brought, maybe these things from April 19 to 2025, the GST has been withdrawn from the premium you pay. So all the premiums the companies claim from after that should have been lower by 18%. Now, what some companies have done, and one company with whom, not the same company, but now my wife has another company, but I don't want to name it. But somebody wants, I can name, because I've got the full documentation. They added some add-ons without our consent. And my original insurance, it was about 18,000, and carried a GST of say 3,000, came to 20,000. So they added some add-ons, but kept the final figure little less than what I paid last year. But when I saw this, I had calculated, I knew I would have to, it had to come down to about 17,000, because about 3,000 was the GST. When I went to the company, they have two offices, one in Margao, one in Panjim. They have done this without my authority. I had spend 4-5 days fighting with them to withdraw that add-ons, and they would not do it, give some excuse or the other. My wife went to the office here in Margao. That fellow says, no, this thing and all that, we'll try and all. Then during the course, she happened to mention that I had gone and won a case with the ombudsman. When he heard that, he just left his cabin, went here, somewhere there, somehow contacted his head office and got the thing withdrawn. So this is what has actually happened to me. And they do it especially for senior citizens. And I don't know how many of you probably not aware and paid extra without, and which they have added it as add-ons and all without getting your permission for it. And in fact, your insurance amount, premium amount, should have gone down by about 18%, because the GST has been withdrawn. These are the two things. The third thing is, I'm not very sure, but I would like to know whether Gavin would can answer me. It happened to my uncle about two years ago. He was admitted in a hospital, well-known hospital, under cashless, at a very good policy. He was admitted at about 11 o'clock in the afternoon, and they checked his policy and all, allowed the cashless. He was put in ICU and a lot of things were done, but he expired at around 11 in the night. And then when the body was to be taken home, after waiting 3-4 hours, hospital refused to give the body, because they said the insurance company is not meeting the bill, reimbursing the bill, because he was not in the hospital for minimum 24 hours. Can you imagine? A patient is admitted in the hospital, he unfortunately expired, but they not paying the bill because it was not, because the clause is minimum 24 hours. So I want to ask you, were they right in doing it? Now, by the way, I know the recent rule of, I think about 10-15 15 days ago, where the ruling has come either from some high court or Supreme Court. No hospital can delay the taking away of the body of a demised person because of the bills. So they have no right to keep the body. You fight the case later, but you have to allow the relatives to take the body home, and you fight the case later. That's the one part of it. But the other part of it, is it compulsory if a person expires after 8-10 hours, or say 11 hours, or say 20 hours? Can you deny the insurance because it's not been there for 24 hours? I don't know.
Not in
So if you look at the insurance business model, what they will perceive is that an insurance policy is designed to cover a healthcare cost which comes within a certain set of rules. Like, for example, your 24 hours admission, they will say that we are not a life insurance payout company. That, okay, if somebody expires below the 25, while less than 24 hours, somebody is expiring, there's a lot of emotion, a lot of turmoil involved. Their stand could probably be that we are not a life insurance company. We are a health insurance company. And if your claim does not fit this set of rules, it doesn't fit whether you're alive or whether you're dead. So there might be some insurance companies where, because of death, and say the person was in ICU, and that could have potentially translated to a 24 hours admission cycle. There are some insurance companies who might consider the claims. But if you just look at the rule book, the rule book says 24 hours. So the first rule is not ticked. The person expired before 24 hours. So it's as good as he was discharged before 24 hours from the medical treatment, because they will go as per the rules of the book. So it would come down to what is the company, what are the factors they are considering. Like if it's like, say somebody met an accident and has been brought dead, and still the hospital has, kind of lug out some treatment, put the person on ventilator, done something just to earn money, and the insurance company has seen that, they might say that we're not settling the claim. Or if the person was brought alive, there was a chance of survival, there was a surgery happening, the person died on the bed, it would all come down, to case basis. Very difficult to
we take daddy and
pinpoint. Very difficult to pinpoint.
I'm busy.
And even on that part which you mentioned of those add-ons, I know which insurance company you're talking about. And so basically what happens, even when we are sending out client insurance renewals, we check. Because people cannot be expected to check for these minor things. So I know what you're referring to. And what did we do is, at the stage of the renewal notice itself, we got it knocked out. So when the person paid, they paid only the premium. They didn't pay the add-ons. So that is where, if somebody goes with somebody who has experience in this industry, knows what to do, how to do, rather than, a policybazaar.com, that when you're in your time of need, the hospital doesn't, that Policy Bazaar or whichever website might not respond to you. That's a lot of feedback that a lot of people have shifted from online to offline agents, because they're saying Policy Bazaar will not entertain my query. I'll go and I'll press 1 for this, 2 for this, 3 for this. So it's very important that you have some trusted person in finance who always checks. Like, see, you all had made the payment, but it is very easy to fight this before them. Now, once they've got the money, they're sitting on it, right? But if you say, I will not pay this premium unless you do this, then it is a little bit different.
Now, one thing is that I don't think actually any policy has got that minimum 24 hours.
Yes.
In other words, if unfortunately anything happens before 24 hours, you don't expect any payment. That's boils down to that. Unless, of course, you fight first with the company, if any company offers you that policy. But it's
that is providing. No, there's a clause there. It is providing that it is not covered under daycare treatment. So, for example, your hernia, cataract, there are so many surgeries today which are covered under daycare. So even if you're not admitted for 24 hours, they pay the bill.
No, that is different. That's what happened for that 20,000. which I
Yes.
explained, daycare. That is a different
Daycare.
issue. Here, the issue is it is unfair. If you have admitted and if you have expired, you to deny this thing because others okay. That means I can keep the body for 24 hours there. That is okay. Then will they pay?
No, it is very difficult. They would probably take the time of death as the time of closure.
That's what I'm saying. We have to be careful about all this insurance.
See, because what happens, insurance company is a business model. Now, just say, for example, keeping emotions aside, if they keep it taking into account emotions and they say, no, we will pay out these claims. You have to remember for every claim that gets paid out, your premium has the potential to rise. If you have noticed after COVID, because of the number of claims, people's premiums went up. So your premium, which you pay, is directly corresponding to what is the payout of the insurance company. So the insurance company says, we'll pay this out, these kind of premiums. You will pay the cost, not the insurance company. So they'll say, okay, so many number of cases are happening within 24 hours of death. Let's pay them out. Your premium will rise. Unless the insurance company already has a policy that on compassionate grounds, if somebody is admitted and within 24 hours, we have never had a case like this, so I am not the best judge of this. But if they have a case that on compassionate grounds, they would have already built that into the premium structure. But if somebody does not have that policy and wants to incorporate, they will raise the premiums of everybody else to be able to pay that premium of that person who has expired within the 24-hour period. So that's how insurance works.
Yeah, thank you.
Welcome.
Gavin.
Welcome.
Thank you, Mr. Alvarez, for sharing your experience. This was very valuable. Gavin, I just have one more follow-up question. I just occurred to me. So, given that the health insurance this much is there, and sometimes it may not be fully covered, what is the amount of insurance you would advise a senior citizen to take, and how much emergency health for a health emergency? How much money we should keep in maybe a slightly liquid form?
So basically, what happens is that as per the claims that we have seen, at a lower level, we have seen claims come in at about 4 lakhs. Medium level, we have seen claims coming in about 6 lakhs. And then we have seen claims coming in the range of 12 to 14 lakhs. So ideally, we would say a minimum a senior citizen couple or individual, because statistically, we have not seen two people as such fall sick at the same time, except in situations like COVID and all, at least 10 lakhs policy. And today's policies come with something called as, a lot of policies come with a restore feature. So for example, 10 lakhs you have, and you get admitted to the hospital and your bill comes to 2 lakhs. Just for calculation's sake, say the entire 2 lakhs is paid by the insurance company. As soon as you're discharged and you're given the discharge summary and you leave the hospital, that 8 lakhs refills back to 10 lakhs. If your policy has got that restore. So there was a case of a client, not my client, another person who had 15 lakhs policy. And in that year, she made cancer claims of almost 38 lakhs with a 15 lakh policy, because the policy kept refilling every time she was.
Okay. And how much cash you think we should keep ready, because we don't want to keep too much?
Say 2 to 3 lakh rupees. If you have a health insurance policy, if you don't have a health insurance policy, you'll need to create that corpus itself, a substantial corpus. Because see, when you go to a hospital, the hospital first tells you put down a deposit.
Right.
And if your insurance company doesn't pay out, then they ask you to, and it also depends on what is your choice. Like for example, there are some people who say that, no, I will go to only this clinic. I don't mind submitting my papers, waiting 15 days, 1 month for reimbursement. So then you need to keep even more, even though you have a health insurance policy in place, you need to keep even more ready. So it all depends even on your personal choices.
Also, other thing is you have to see which hospitals are approved by your
Of course,
insurance.
that's the first thing we tell people. Please look at the hospital list.
And sometimes the emails every year they can change also.
So mostly, what happens? They might add on hospitals. They will remove hospital only if a hospital is found to be doing fraud.
Right.
So generally, year on year, we have only seen lists tending to increase, not decrease. Unless there has been some fraud, you'll see the list increasing, because so many hospitals are opening this, that you'll see the thing increasing.
Great.
Now which are being added.
Anybody else has any questions?
New procedures.
New procedure.
We have, we have passed our time. We'll take one more question if you don't mind, Gavin.
Yes, sure.
Anybody has any questions? Well, I think so. So I think so. We'll close out
If
here.
anybody has any questions, personal and all, you can, I mean, for senior citizens, it's not going to be if you require any consultancy, at least for senior citizens, it's not going to be any type of a paid service. We are very happy to help you all out. So you can, if it's a personal question, financial question, which you cannot talk in public forum, please feel free to connect. Our office is in Panjim, very close to Don Bosco's. So even if somebody wants to come, meet, see, ask, should I do old, should I do new, what exactly should I do? This will come to you at no cost. There is no problem. We are here. We also work a lot with senior citizens, and we will be happy to help you at no cost. So you can always reach out.
Great. Thank you. So I will be taking your information and I'll be posting on the WhatsApp group. So all the seniors, there are some people who couldn't join, so they can also reach out to you.
Surely.
Thank you, Gavin. Thank you very much.
Hi, Gavin.
Thank you.
Gavin, hi.
Hi,
Just
Sheldon.
a small thing. Hi. Could you just for 2 minutes explain that document you had shared once before with us? It was consolidated all the information document. It's something good that the seniors can keep ready for their next of kin or anything like that. Even for their next generation onwards, so that you can speak about it just for a few minutes.
Yes. Just give me a minute. Fortunately, while preparing my earlier slides, now I was just going through my past data, and I had kept that file also open. So it's called your financial record keeping. Most often, many times people come to us and say, I don't know what my husband did, and I don't know he's invested in this shares, these mutual funds. I have no clue. Can you help me? Or a husband also comes and says I do not know where my wife's financial affairs are, which bank, which. So we always tell people have this financial record keeping system. Where, for example, in a common place like your locker or maybe at home, you have this kind of thing. What is your personal details? What are your advisors? Because sometimes somebody might have a financial advisor. Only one person might be corresponding, other person might not be aware. So what is that person's contact number? What is your life insurance? You might have taken your health insurance policy from that person. That person's job is not to sit and collect commission. That person's job is to also help you when your claim is stuck or help you to guide you. So, but if you're in the hospital under anesthesia, how is your agents? So you keep all these details noted. Then same thing, which are the banks? People come, then they go, I think my husband had an account in this bank. Now let me go to with her PAN number, his PAN number and ask. But just I'll circulate this book also, which I can just print and write the number of banks. Then what are the lockers? Some funny case was there after demonetization where some kids found some mother's locker, something like that way, and there was 1 crore of cash in that locker. And the notes were demonetized, right? So there was zero value for that notes. So because people don't know what their parents have, what their spouse also has. Is there a PPF account? Is there an insurance policy? Life insurance, because somebody might have taken a term plan with a 10 term plan, sometimes have high covers, 50 lakhs, 1 crore, 75 lakhs. But if the person who's your loved one doesn't know about this, that policy has gone down the drain. Then what are your investments? You might have a demat account. I've seen so many people stuck with shares and they have no clue. Where are the shares? Is it with Carvi? Is it with Axis Bank? Is it with HDFC Bank? They have no clue because this has not been discussed. At least this should be written down and kept. Demat, your mutual funds. Where are your mutual funds? There are some people who make mutual funds through distributors. There are some people who make mutual funds directly with the mutual fund companies. Now, if you're made with several companies, who is going to track? Who is going to consolidate? Please put everything down in one place like this. What is the type of fund? What is the holding of the fund? Who is the nominee? Then real estate, will, You might have made a will, but who's the executor of your will? Where is the will kept? Yeah. So that was a quick run through on maintaining your financial information. I can share one file itself, which you all can print, feed in, and put your details.
Great, great. That would be a great help. Thanks. So I think so we'll close it up now. Gavin, thank you very much.
Welcome.
Okay, so everybody can now check out of the meeting. Thanks.
Okay, thank you.
I'll
Thanks.
close the record.
Thank you
Thank
so
you,
much,
Gavin.
Gavin.
Thank you, Gavin. Yeah.
Thank you.
Thank you.
Thank you, Gavin.
Thanks.
And
Welcome.
thanks,
Thank you, Gavin.
Tanya, too.
Thank you.
Thank you, Gavin.
Thank you. Welcome.
Thank you, Gavin.
Welcome.
And they just closed the meeting.
Good night, everybody.
Good night.
Good.